Welcome back to another enthralling adventure with Conveniently Unspoken, the channel dedicated to shedding light on history's untold narratives. In this episode, we delve into the controversial 16th Amendment to the United States Constitution, also known as the Income Tax Amendment, and how it forever changed the Americans' personal finances as well as America's public finances. The creation of the 16th Amendment and the push for income taxation in the United States were influenced by a complex interplay of domestic and international events during the late 1800s up until World War I. While the narrative often involves the involvement of prominent individuals and families like the Rothschilds, Schiffs, J.P. Morgans, Rockefellers, and Warburgs, it's important to note that attributing their actions as the sole driving force behind the 16th Amendment oversimplifies a multifaceted historical context. The time between the late 19th and early 20th centuries marked a significant period of industrialization and economic growth in both Europe and the United States. The Rothschild family, a prominent international banking dynasty, was involved in various financial activities across Europe and had significant influence. Their connections contributed to the development of financial markets and investments. Rothschild financial interests had greatly influenced the American financiers such as Jacob Schiff, Paul Warburg, J.P. Morgan, and John D. Rockefeller, assisting them in amassing incredible fortunes. Rapid industrial growth led to the concentration of wealth and increasing income disparities. Progressive and populist movements gained momentum in the late 1800s and early 1900s. Advocates for social and economic reforms sought to address issues of income inequality and corporate power. By the early 1900s, the U.S. government faced challenges in generating revenue for its operations and funding public programs. Tariffs were a major source of revenue, but there was a need for additional income streams. Theodore Roosevelt, the 26th President of the United States, supported the idea of progressive taxation and advocated for a federal income tax. He believed that such a tax could help address wealth inequality and fund important government programs. William Howard Taft, the 27th President of the United States, was a strong advocate for the 16th Amendment. He saw income taxation as a way to address budget deficits and provide a more stable source of revenue for the federal government. Woodrow Wilson, the 28th President of the United States, was a vocal supporter of the 16th Amendment. He believed that an income tax would help create a fairer tax system and provide funding for government initiatives, including his domestic policy agenda known as the New Freedom. During Wilson's first year as president, he signed into law the Federal Reserve Act, which established the third instance of a central bank in the United States as a response to financial panics and the need for a more stable monetary system and as a lender of last resort. Up to this period, central banking systems were established in various countries. The Bank of England, 1694, the Bank of Italy, 1893, German Reichsbank, 1876, the Bank of Spain, 1782, and the Banque de France, 1800s, which served as early models for central banking and were all influenced by the Rothschild dynasty. As noted in our previous video, the main proponents for the creation of the Federal Reserve, J.P. Morgan, Henry Davison, Paul Warburg, Nelson Aldrich, had all been influenced by Rothschild interests at one point or another. Now that a central bank was instituted, next was to create a redistribution of wealth through government control. As we remember from an even further video, the famous or infamous Mayor Amschel Rothschild quote, "Give me control of a nation's money, and I care not who makes its laws." After the creation of the Federal Reserve, national debt quickly ballooned. The federal government had to pay the central bank's interest on all the currency printed into circulation. In order to cover this interest payment, Congress would need to institute a national income tax. In 1909, President William Howard Taft proposed an amendment to Congress that would authorize a federal income tax. The proposed amendment passed the House of Representatives and the Senate, and it was sent to the states for ratification. By February 3, 1913, the necessary 3/4 of states, 36 out of 48, had ratified the amendment. With the ratification of the 16th Amendment, Congress gained the authority to levy taxes on income without the need for apportionment among the states. The passage of the 16th Amendment marked a significant expansion of federal taxing power and had far-reaching implications for the funding of government programs. It remains a subject of debate and discussion in contemporary conversations about taxation, government authority, and economic policy. Advocates of income taxation, including progressive reformers and policymakers, saw it as a way to address wealth disparities and fund government initiatives. Conversely, critics of the amendment suggested that income taxation could provide the government with a steady source of revenue, potentially leading to increased government spending and a larger bureaucracy. Concerns were raised about the potential for the federal government to use income taxation as a means to centralize power and undermine the authority of individual states. Proponents against the amendment worried that it could lead to an erosion of states' rights. Arguments have been made that the entire ratification process for the 16th Amendment was wrought with errors important to legalese. These arguments include variations in wording, punctuation, capitalization, and pluralization in the language of the amendment as ratified by many states. William Benson, co-author of the book, The Law That Never Was, The Fraud of the 16th Amendment and Personal Income Tax, used the changes as part of the basis for his contention that those states had not properly ratified the amendment. Benson further claimed to have found documents suggesting that some states that had been certified as having ratified the amendment never voted to ratify it or voted against ratification. Benson claimed that no states, or only a few states, had properly ratified the amendment. In his book, Benson made the following claims. 7 states did not ratify the amendment, and it was reported as such. 2 states did not ratify the amendment, but Secretary Knox reported that they did. 8 states were reported by Secretary Knox as having ratified the amendment, but the states have missing or incomplete records of the ratification procedures or votes, and there is no conclusive record that they ratified the amendment or reported any ratification to the Secretary of State. 6 states did approve the amendment, but the governor or another official who was required by their respective state constitutions to sign the legislation into law did not sign the legislation. In 25 states, the legislature violated a provision of its state constitution during the ratification process. 29 states violated state law or procedural rules during the ratification process. Additionally, Benson asserted that 22 states approved the amendment, but with changes in wording, and the inexact version was accepted as a ratification of the original version. 1 state approved the amendment, but with variations in spelling, and the inexact version was accepted as a ratification of the original version. At least 26 states approved the amendment, but with changes in punctuation, and the inexact version was accepted as a ratification of the original version. It is important to note, however, that Benson's claims have been rejected in several cases, including United States v. Benson. Yes, the same Benson. So, from a current standpoint based on court opinion, the 16th Amendment is in fact constitutional. However, what the 16th Amendment did from an Illuminati ideology or Rothschild conspiracy perspective was to create a dependency-based class system, separating the elite from the working class. The main purpose of the income tax was not to raise revenue, but to redistribute wealth and control society. This works because, while in theory the rich and wealthy should pay more in taxes at a marginal tax rate, they were able to exempt themselves through tax-free foundations under the guise of philanthropy and corporate trusts, while at the same time lower and middle classes have a larger percentage of their wealth paying the interest on our national debt. Low-income Americans face higher payroll tax rates than rich Americans. Americans with less than 5-figure incomes pay an effective payroll tax rate of 14.1%, while those making 7-figure incomes or more pay just 1.9%. If we look at the United States debt today, on average, payments on our interest exceed every other major spending category. When we view this metric from a household standpoint, paying interest on our federal debt exceeds all other monthly living expenditures. So, was the 16th Amendment a perfectly piped icing on top of the Federal Reserve cake that was baked patiently to perfection for over 100 years by the Rothschild family or the Illuminati? Comment below and let us know what you think of this video and other video in our series, or if I should just never try to paint a picture like that again with a cake. That's it for us here today, folks. If you are interested in learning more about other conspiracies or hidden narratives in history, please make sure to like this video, subscribe to our channel, and hit that notification bell so you can be alerted when new content is uploaded. And remember, the truth may be conveniently unspoken, but it's worth seeking.